Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we're diving into the stormy seas of semiconductor stocks, a sector that's been hit hard recently. But here's the twist. While many investors are running for cover, could this be your golden opportunity to pick up some of the best names in the industry at a discount? Stick around, because by the end of this video, you'll know which stocks are worth buying even in this turbulent market, and why patience could be your best ally right now. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Semiconductor stocks have faced a significant downturn in recent weeks. The recent summertime slump has sent many investors into a state of uncertainty, wondering whether this is an opportune moment to buy at a discounted price or if the downward trend will continue. The semiconductor industry, known for its cyclical nature, is currently experiencing one of its most severe declines in nearly 2 years. At the time of writing, the VanEck Semiconductor ETF, ticker SMH, a popular barometer for the industry, has fallen by 17.9% from its peak. The decline follows a textbook double-top technical pattern, a bearish signal suggesting further downside could be on the horizon. However, predicting the bottom of this downturn is challenging, and the recent relief rally was quickly dismissed as nothing more than a dead cat bounce. If you're still keen on increasing your exposure to the artificial intelligence (AI) sector, don't let the recent weakness in semiconductor stocks deter you. However, it's crucial to be prepared for potential volatility and understand that investing in this sector may require riding out some significant waves before reaching calmer waters. Let's start by discussing Advanced Micro Devices, ticker AMD, a prominent player in the semiconductor space. Despite delivering strong quarterly results recently, which initially boosted the broader semiconductor market, AMD's stock has been on a downward trajectory. The company's shares have shed their post-earnings gains and are now down over 37% from their all-time highs. This steep decline has left many investors questioning whether AMD still holds promise as an investment. It's important to note that while AMD may not have the same level of dominance as Nvidia in the AI space, it remains a significant player with a healthy business outlook. The company has been riding the AI wave, with strong demand for its Instinct and Ryzen processors. Moreover, AMD raised its AI chip guidance, signaling confidence in its future growth prospects. However, the market's current risk-off sentiment has led many investors to overlook these positives as they seek safer investments. If you believe in AMD's long-term potential and its ability to capitalize on the AI revolution, now could be an opportune time to consider adding this stock to your portfolio. AMD has positioned itself as a key player in the development of high-performance computing and AI technologies, which are expected to drive the next wave of technological innovation. The company's focus on delivering cutting-edge processors and graphics cards has helped it gain significant market share in both consumer and enterprise segments. Furthermore, AMD's recent acquisitions and strategic partnerships have strengthened its competitive position, allowing it to offer a broader range of products and services to its customers. One of the key factors that could drive AMD's future growth is the increasing demand for AI and machine learning applications. As more industries adopt AI-driven technologies, the need for powerful and efficient processing solutions will continue to grow. AMD's Instinct and Ryzen processors are well suited to meet this demand, making the company a critical player in the AI ecosystem. Moreover, the company's strong balance sheet and cash flow generation provide it with the financial flexibility to invest in research and development, ensuring that it remains at the forefront of technological advancements. But before we proceed, here's a question. Do you think the rise of AI will continue to drive semiconductor stocks higher in the long run, despite short-term volatility? Let us know in the comments below. Moving on to Intel, ticker INTC, another semiconductor giant that has seen its share of struggles. Intel's stock has recently hit new 52-week lows, driven by a disappointing second-quarter earnings report. The company missed analysts' already modest expectations, which raised concerns about its future performance. Adding to the uncertainty, Intel announced it would be cutting its dividend in the fourth quarter to conserve cash, which led to an almost 19% drop in the stock during after-hours trading. This decline was further compounded by a 5.5% plunge in the following trading session. Intel is also facing internal challenges, including a massive layoff of 15,000 employees, representing over 15% of its workforce. These cost-cutting measures are part of the company's broader strategy to navigate a challenging market environment. However, the outlook for Intel remains uncertain, and the bullish contrarian case for investing in the stock seems to be weakening. Despite these headwinds, Intel's stock is becoming increasingly attractive from a valuation perspective, presenting a potential deep value opportunity for investors who believe in the company's long-term turnaround strategy. Intel has long been a leader in the semiconductor industry, with a rich history of innovation and technological breakthroughs. However, the company has faced increasing competition from rivals such as AMD and Nvidia, which have eroded its market share in key segments. To regain its competitive edge, Intel has embarked on an ambitious restructuring plan aimed at streamlining its operations and refocusing its efforts on core growth areas. One of the key pillars of Intel's turnaround strategy is its renewed focus on data-centric businesses, including cloud computing, artificial intelligence, and autonomous vehicles. The company is investing heavily in these areas, with the goal of becoming a leader in the next generation of computing technologies. Additionally, Intel is expanding its manufacturing capabilities, with plans to build new semiconductor fabrication facilities to meet the growing demand for advanced chips. While the road to recovery may be challenging, Intel's strong brand, extensive patent portfolio, and deep industry relationships give it a solid foundation to build upon. For investors with a long-term perspective, Intel's current valuation may present an attractive entry point, particularly if the company can successfully execute its turnaround plan. Next up is Taiwan Semiconductor Manufacturing Company Limited, ticker TSM, a blue-chip semiconductor company known for its strong market position and consistent performance. Unlike many of its peers, Taiwan Semiconductor has not experienced as dramatic a decline, although it is still down more than 17% from its recent peak. The stock's current valuation, with a forward price-to-earnings ratio of 25.9, appears relatively cheap compared to other semiconductor stocks benefiting from the AI boom. Taiwan Semiconductor is a critical player in the global semiconductor supply chain, serving as a key manufacturer for many of the world's leading technology companies. Despite the geopolitical uncertainties surrounding Taiwan, particularly with the upcoming U.S. presidential elections, the company's fundamentals remain solid. Investors who can look past the geopolitical noise may find Taiwan Semiconductor an attractive long-term investment, especially with its 1.5% dividend yield providing some downside protection. Taiwan Semiconductor has established itself as the world's largest contract chip maker, with a dominant market share in the production of advanced semiconductor chips. The company's cutting-edge manufacturing processes and commitment to innovation have made it the go-to partner for leading technology companies, including Apple, Qualcomm, and Nvidia. As a result, Taiwan Semiconductor is well-positioned to benefit from the ongoing demand for high-performance chips in industries such as smartphones, data centers, and automotive. The company's strong financial performance and robust cash flow generation have allowed it to invest heavily in research and development, ensuring that it remains at the forefront of technological advancements. Additionally, Taiwan Semiconductor's strategic focus on environmental, social, and governance (ESG) initiatives has helped it build a strong reputation as a responsible corporate citizen, further enhancing its appeal to long-term investors. Looking forward, Taiwan Semiconductor is expected to continue its leadership in the semiconductor industry by expanding its production capacity and developing next-generation chip technologies. The company's commitment to innovation and quality has earned it a loyal customer base and a strong competitive advantage in the market. With the global demand for advanced semiconductors expected to grow, Taiwan Semiconductor is well-positioned to capitalize on this trend and deliver long-term value to its shareholders. The table provides a comprehensive overview of three key semiconductor stocks: Advanced Micro Devices, Intel, and Taiwan Semiconductor. It highlights their recent performance, valuation metrics, and financial standing. AMD has experienced a significant decline of over 37% from its peak, with a forward PE ratio of 27.79, but it lacks a dividend yield. Intel, despite facing challenges, offers a dividend yield of 2.6%, though it has a high forward PE ratio of 63.15. Taiwan Semiconductor stands out with a balanced forward PE ratio of 25.9, a solid 1.3% dividend yield, and strong revenue, positioning it as a robust player in the semiconductor industry. This table reveals the diverse opportunities and risks within the semiconductor sector, emphasizing the importance of considering both short-term performance and long-term potential when making investment decisions. In conclusion, the recent downturn in semiconductor stocks presents both risks and opportunities. While the market's volatility may be unsettling, It's essential to remember that the semiconductor industry is cyclical by nature. Periods of weakness often present buying opportunities for long-term investors who can weather the short-term turbulence. Advanced Micro Devices, Intel, and Taiwan Semiconductor each offer unique investment propositions depending on your risk tolerance and investment horizon. As always, it's crucial to do your own research and consider your financial situation before making any investment decisions. This video is for informational purposes only and should not be taken as financial advice. But before we go, here's another question. What do you think will be the next big trend in the stock market? Share your thoughts in the comments below. If you found this content valuable, please like the video and subscribe to our channel for more insightful content. Thanks for watching Simple Investing Secrets, and we'll see you in the next video.